Whether the question says that you are required to calculate the cost of merger, or true cost of merger, or cost to A limited. All these three questions will have the same answer. Basically, we understand that say it is indicating what is the excess consideration which acquiring company is paying for acquisition of the target company. The last question, that is NPV to the target company. And we understand logically that whatever is the cost to the acquiring company, itself is the NPV to the target company. Consider following financial data of A limited and T limited just before the merger announcement of the later, that is E limited, by former, that is A limited. Market price per share is provided to us 150 and 30 rupees per share. Number of shares are 10 lakhs and 6 lakhs. Market value of the firm is given to us. For acquiring company it is 1500 lakhs and for the target company it is 180 lakhs. A limited intends to pay rupees 240 lakhs cash to T limited. There are 4 questions provided to us. So the consideration is in form of cash. And the question says that you are required to make certain calculations. Second part of the question. If A limited intends to offer 1,60,000 shares in exchange of the shares of the T limited, assume further the merger is expected to generate a cost savings with present value of 94.8 lakhs. It is expected that these cost savings would push up the market price. Find out again, a few questions have been provided to us. I request all of you to go to the question and then we'll discuss how to calculate the answer. Let us have understanding of the answer. You don't have to write anything. Dear students, we are required to make the calculation of cost of merger, or we can say that we are required to find true cost of merger, or we can say that we are required to find cost to A limited. Dear students, I am writing all because these 3 questions are one and the same. And answer is required to be found like this. You are paying an amount of rupees 240 lakhs against the market value of the target company 180 lakhs. So what is the excess consideration that you pay? You pay excess consideration of 60 lakhs. Whatever this excess consideration that you pay is considered to be the cost of merger or true cost of merger or cost to A limited. That is what we understand. Target company has its independent value amount of 180 lakhs and it is getting a consideration of 240 lakhs. So what is the amount of the excess consideration that it is able to receive? 60 lakhs. And that is considered to be the NPV to the target company. Now proceeding further, we are writing the answer slightly later on. First of all, let us have understanding of the question. In the second part of the question, I hope that everybody is clear that the consideration is discharged in form of the issue of equity shares. The question is providing the information further that there will be a savings of the expenses and present value of the same is 94.8 lakhs. The A part of the question says that so what is the benefit of merger or what is the gain of the merger? In that, first of all, we usually make the calculation of market value of the merged firm. It is market value of A 1500 lakhs, market value of T 180 lakhs plus 94.8 lakhs. So the total of these 3 is an amount of 1774.8 lakhs. This is what we understand is the market value of the merged firm. So as far as the gain or benefit due to merger is concerned, it is 1774.8 minus 1500 plus 180 lakhs. So what will happen? We understand that say the benefit or gain due to merger is 94.8 lakhs, which we can compute directly also. That's not something which is great. Now, as far as the cost of merger, true cost of merger, cost to A limited, any of the question will always have the same presentation of the answer. Let us have understanding that's how to make the calculation of answer. Please do not write anything, let me explain to you. We have been provided with information that 1,60,000 shares are issued by acquiring company for acquisition of the target company. Number of equity shares of the acquiring company is right now 10 lakhs. So we can say something like this. 1774.8 lakhs is the market value of the merged firm. Divided by number of shares of the acquiring company 10 lakhs, shares issued to the target company is 1,60,000. So use a calculator 1774.8 divided by 11.6. So market price per share is 153 into 1,60,000. In a way that's a number of shares issued to the target company. It means that say we have computed this is the market value attributable to shareholders of the target company in the merged firm. This is the market value attributable to target company in the merged firm. What was the market value that it had before merger? It was 180 lakhs. So what is the excess consideration which has been received by the target company shareholders? 64.8 lakhs. So whatever this excess consideration which target company is able to receive is considered to be cost of merger. Yes, understand friends carefully over here. As far as the cost of merger is concerned, it is calculated from acquiring company point of view. That what excess consideration is paid to the shareholders of the target company over its independent market value. We have paid in total the consideration of 244.8 lakhs, which is calculated like this: MPS of the merged firm into number of shares issued to the shareholders of the target company. So this is the value attributable to the shareholders of the target company in the merged firm minus market value of the target company before merger. Difference between both of them is considered to be the cost to acquiring company. This is the way we make the computation of answer. Now we understand that whatever is the cost to acquiring company, itself is the NPV to the target company. So as far as the NPV to the target company is concerned, it is 64.8 lakhs itself. Whatever the calculation that we have recently made, that itself is the answer that we have to write for NPV to the target company. This is what we understand. Last calculation. Last calculation is what is NPV to the acquiring company. Dear students, we understand from the acquiring company point of view, we can make calculation by one of the two methods. Logically, we understand like this: NPS of the merged firm minus NPS of A before merger multiplied with number of shares of the acquiring company. NPS of the merged firm is 153. Before merger, it was 150. So there is an increase of ₹3 per share into number of shares of the acquiring company, that is 10 lakhs. So the NPV to the acquiring company shareholders is 30 lakhs. Or we can say, what is the overall benefit or gain due to merger? Overall benefit or gain due to merger is 94,80,000. Out of this 94,80,000, what is the amount of the gain which is transferred to the shareholders of the target company? 64,80,000. So the remaining is what we understand is the gain attributable to the shareholders of acquiring company, that is an amount of 30 lakhs. So here friends, we can make the computation of the answer in this way, that this is the NPV to the target company, or we can say cost to the acquiring company. And this is what we understand is the NPV to the acquiring company. Now number of times students are having a question like this to me. That sir, why this is a cost to the acquiring company? Because basically acquiring company is not paying anything out of its own pocket. It is only that whatever is the gain of the merger, out of that say a certain amount of the gain is transferred to the shareholders of the target company. So how it is the cost to the acquiring company? That's very true. However friends, we understand that, listen carefully. However, we understand that say whatever this 94 lakh, that is 94.8 lakhs gain, which is supposed to be realized, is like the kind of business which acquiring company is going to do. So orders of doing business is on the acquiring company. That is the reason, say this is even though paid out of gain of the merger, that is considered to be say the cost of the merger.